So if you're a non-US person, registering an LLC in the US is often a really good option depending on the nature of your business. And I'll clarify, by definition, a non-US person is a non-US citizen or green card holder or otherwise taxable person in the US. Now, there are a lot of nuances here. Let's say, for example, you are, I don't know, let's say a German and you register a Wyoming LLC. And let's say you open an office and you have employees in maybe an office or a warehouse or something like that. Then you're going to have what's called ECI, or effectively connected income. So your business will have income effectively connected to the jurisdiction where your business is located. In that case, the income from your business will be taxable. So for clarity, an LLC by default, the tax status of an LLC by default is it is pass-through. So the LLC itself is not a taxable entity. The default status of an LLC, it doesn't file a tax return unless it's a partnership. In that case, then you do file a partnership return, but then still you don't have a tax obligation with the LLC. The people that earn the money as members or partners in the LLC are the ones that may or may not have a taxable event from that LLC. So let's say you're a single member LLC, you're a German citizen, you're not a US person for tax purposes, and let's say you make $100,000. The LLC does not pay tax on $100,000. The $100,000 passes through to you as a German person, and that means you personally have earned $100,000. Now, we have to look at the nature of the business to determine whether you personally have a tax obligation associated with that $100,000 earned. So I'm going to simplify a bit because there's a lot of nuances here, but if your business had effectively connected income, like I explained before, then yes, you do have a tax obligation in the US, and you personally would have to file a 1040 NR. The NR stands for non-resident, and the 1040 is the personal tax return form. So you'd file a 1040 NR to report that income and pay tax on it. However, if you were a German person and you did not have effectively connected income, let's say, for example, you did consulting, or maybe you sold digital products online, or you had some other, let's call it virtual type business, then you don't have effectively connected income, meaning no office, no employees, that sort of thing. So then that income passes through to you personally. You personally are not a taxable person in the US. You personally don't have a tax obligation. However, you still need to, for the LLC, you still need to file an IRS form 5472 and an 1120S. Those forms inform the IRS that entity is more than 25% owned by a foreign owner. That can be a person or another company or whatever, but it's more than 25% owned by a foreign owner. It's not, you don't necessarily have a tax obligation. It's just an informational return that you have to report every year by April 15th. So in that case, that German person with the, let's say, consulting business running it through a Wyoming LLC would have to file those tax forms, IRS form 5472 plus an 1120S, but he would not have a tax obligation. He would just have those two tax forms to file every year, and that's it. That makes sense? You basically have to let the IRS know who owns that entity and where that income got allocated. So if it's more than 25% owned, let's say, for example, a German owner owned 50% and an American owner owned 50%. So then you would also need to file a partnership tax return or a 1065. That 1065 tells the IRS who owns the company and who is allocated what percentage of profits of that company. And so each of the owners would then get what's called a K1. A K1 is a partnership distribution form that shows the IRS who earned how much money. But because it would also be more than 25% owned by the German owner, you would also have to file a 5472 and an 1120S to show, or a 5472 to show the IRS that more than 25% of that profit, in this case 50% of that profit, is allocated to a non-US person. So that basically informs the IRS that they don't necessarily have the ability to collect tax on that income as long as that business doesn't have effectively connected income in the US.